What's up, guys? Welcome back to Mark's stock review video on Lucid Motors. A lot of negativity approaching the ER, including a recall and negative articles. So I'm going to offer a few reasons to stay bullish on Lucid and what to look for on the next earnings report. I'm going to start off on the recall. I'm not going to get too much into the specifics since most of you already know, but basically it's a possible brake failure related issue affecting about 1% of 203 vehicles. There's been a lot of negativity on the recall, but I'm going to offer 4 positive points. Number 1, it was an installation issue, not an issue that should affect the performance or the quality of the vehicle. Of course, Lucid is still responsible, but in my opinion, it's an issue likely to have a straightforward resolution, and best to get this out of the way early in production. Number 2, Lucid was notified directly by the German supplier about the problem, eliminating the possibility of more cars being delivered, which would have made it much more problematic. Number 3, even high-end manufacturers have recalls, including Tesla. Recalls are common. This one only seems worse since Lucid had so few vehicles delivered at the time. And number 4, the share price only dropped a couple dollars, roughly 5% on the news. So this tells me either Wall Street thinks this is not a long-term problem or the share price is relatively near the bottom. I now want to discuss an article related to Morgan Stanley's view on Lucid, specifically the analyst Adam Jonas. The article put a negative spin on Lucid. However, reading the article through, there was some encouraging information, so I want to highlight 3 key points. Number 1, it's based on anecdotal information that they anticipate the Q4 deliveries of the Air to be well below the guide. The street thinks it's going to be in the 200 unit range, but also noted it to be quote unquote no big deal, and the focus really should be on the fiscal year 22 delivery guidance, which should be about 20,000 vehicles. Number 2, the article emphasizes Morgan Stanley's $16 price target. However, the fact is that price target is Wall Street's most bearish. The average analyst price target is really $36.50 and the highest is $57. And that's a roughly 60% gain using the average price target. And point number 3, Jonas is predicting volatility due to short interest of about 16.5% and a free float of 569.96 million. So simply put, long-term holders should take advantage of dips and add to their position. Next, I want to tell you 6 more reasons to stay bullish on Lucid. Number 1, the price of Lucid has been pushed down by the current macroeconomic scenario, including pending interest rate hikes due to inflation. Also because of the geopolitical conflicts, we all know about the Ukraine-Russia situation. Silver lining is that this conflict may persuade the Fed to be less aggressive on rate hikes. And so newer companies like Lucid are affected unequally in a negative way because they are more dependent on interest rates and valuations. The beta on Lucid was not available. However, it's clearly high, meaning that Lucid will get hit the hardest when the stock market is down, but during the recovery, Lucid will outperform the market. Number 2, the $1.7 billion in cash raised a few months ago from convertible senior notes due in 2026 will provide them the dry powder to help them get through this time period, as well as for 2023. Number 3, the price of Lucid is down well over 50% from all-time highs. Numbers 4, 5, and 6 already listed below. Basically, a reminder that Lucid is still considered a high-end EV company and a potential rival to Tesla. Lastly, here are some key metrics that you want to look out for during Lucid's upcoming earnings report. Earnings per share, they need to report a loss of share below 30 cents in order to beat market expectations. Revenue is expected to be $59.87 million, highest expectation $83 million, lowest expectation $36.74 million. And finally, reservations. This is a big one. Look out for an update on the 2022 reservations. This could be a big catalyst. And the manufacturing timeline is listed below to the left. Please feel free to pause the video and take a look. Bottom line. In my opinion, Lucid Motors is in the top few EV makers, and all of the issues going on lately, including the geopolitical problems and recalls, are all transitory. So to me, it's just a matter of time before the share price gets back to near all-time highs. And in the meantime, the short interest and the float will increase volatility, so take advantage, especially on the upcoming earnings report. And remember to keep a close eye out on the reservations guidance. And as always, I keep the videos relevant, brief, and to the point to respect your time. All I ask in return is a thumbs up and to consider subscribing if you haven't already. Also, let me know if you have any suggestions for future videos. Have a fantastic rest of your day, and I'll be talking to you soon. Take care.